Good evening, everyone. Welcome to our BullCharts user group webinar for all BullCharts users, both local, wherever that might be, Melbourne or Sydney, and remote. We're now getting underway. And tonight we've got a presenter who will display some slides, PowerPoint slides, and our disclaimer. Please remember that nothing tonight is advice of any sort. You should always seek the advice, counselling, guidance of a financial professional should you wish to trade or invest in the markets. If you do win any money based on information you hear tonight, please feel free to share it with us. In the minutes of last week's meeting, Tuesday the 18th of April, we had 6 people present, not a large crowd. And there's a summary there of what we talked about regarding BullCharts Security Manager and tracking commodities and thematics. And what I mentioned last week was that back in December, Pete shared with us his watch list structure that he uses in BullCharts, and that's a screenshot of it on the right. He uses this structure based on thematics in his watch lists. He's got watch list folders within the watch lists. So under the thematics heading, he's got energy as a subheading, entertainment, EV materials, food supply, and so on, and then individual watch lists under those subheadings. And he shared that with us as an example of one thing you could be doing in your BullCharts Security Manager in your watch lists if you wanted. He also shared with us his spreadsheet where he cross-references which stocks are participating in which commodities and which themes. And both that screenshot of his security manager and this spreadsheet are both available for you to download from the Google Drive. Then in February this year, in the Melbourne meeting, Adam shared with us a spreadsheet he had prepared. Here are a couple of screenshots of it. There are 2 worksheets in the spreadsheet. One of them lists all of the ASX stocks sorted by commodity, and there are columns to the right that indicate which commodity each of these stocks has an interest in, whether they're explorers or miners or producers or whatever. And the second worksheet listed here, there's an example of it, has a whole lot of entries in it, potentially several for each security, indicating which commodities they are involved in. So there are 2 different views of the same material, and that's in the Google Drive as well. Adam also put together 23 BullCharts watch lists, 1 for each commodity. And those watch lists are in a zip file in the Google Drive, so you can download that zip file and you can take all of those 23 watch lists and copy them across into your BullCharts Security Manager with your other watch lists in a fairly simple, straightforward step. There's a how-to document in the Google Drive with this to explain how to do it. And if people want, we can demonstrate tonight how to do that. The information that Adam put together there, he generated from the website marketindex.com.au, which a few people keep saying is a good website with lots of information about those sorts of things. So feel free to have a look at marketindex.com.au. You might find some use for it. In the meeting last week, Andy showed us what he does in his security manager. As one example, he's got a watch list called S&P 300 Scalper. So that's the S&P ASX 300 index, which I think is the XKO, could be wrong. 300 stocks in it. He's used the comment field in Security Manager to include the sector that stock is primarily involved in. Of course, in a watch list, you can't have a stock mentioned more than once. You can only do it once. So this comment field is the focus of that particular stock. And he's used a prefix in the comment field, a alphabetic letter with a dot to force the sort order of those comments. There are some notes there about why Andy does that and what he does with it. Des, welcome back
Oh,
to the session
by all
again.
means.
Welcome. This is a presentation that Des presented to the Melbourne meeting a month ago, and it's all about linear regression in BullCharts. Please, everyone, make Des welcome.
Thank you. As Robert said, I gave this presentation a little while ago to the Melbourne user group, and it came about because I'd been looking at linear regression and the linear regression tools within BullCharts to see whether they could be of use in terms of assisting charting and decision making. So whilst I was broadly familiar with linear regression from my university days, I did a little bit of a catch up on it and revised and reappraised myself, and then started playing with it. And I've come to some interesting insights, maybe too fancy a word, but some observations perhaps as to how linear regression may or may not be useful to us. So the agenda for tonight is, for those of you that aren't familiar with linear regression, what is it? I've mentioned that BullCharts has the ability to provide linear regression lines, and I'll look at that. Then that's all very interesting, lines on charts. We've got lots of those. What do they mean? And can I apply it to a more sensible analysis of the chart? And as normally with me, any of the script that I demonstrate here, freely available to anybody that wants it. Happy to have criticism, and the usual disclaimers all apply. If anybody wants to ask any questions as we go, which I certainly would encourage, perhaps if you click on the comment box or the contact box at the right-hand side, and Robert, if you could monitor that and break in if somebody wants to say something.
Yeah, no problem. Thanks, Des.
Thank you. But as when I was putting this presentation together, I came across a little detour, a side alley within the charting world or within the IT world, and I'd like just to go down that little path for 4 slides, just to give you an area of I find interesting and which is becoming more and more important perhaps within the IT world, and that's this whole area of AI and how that's becoming to be used more and more within the IT world. And the question is it worthwhile? What does it mean? So there is a reason to this, because I then tied back to linear regression after the couple of slides. So it's a little bit of a detour, and I don't apologize for that, but I think it's quite interesting. You may be aware of a piece of software called ChatGPT, and there are others. ChatGPT was probably the first one which came onto people's notice, and it's basically Google with an AI steroids. So you ask ChatGPT a question, and it gives you an answer. The thing that distinguishes it from a Google search is when you do a Google search, you'll get back 5, 10, 50, 5,000 responses, mainly being a URL to somewhere on the web that has some information about that topic. ChatGPT and these AI engines go one step further. They go to the URLs and examine what's there within context, and they then give back, answer your question, but in a much more readable form. Now, we've all seen text that's been presented by some bot behind the scenes. For instance, if you go to Yahoo, the financial pages of Yahoo, they routinely give you stock reports, and you read them, and they all sound the same, and they're all being cut from the same template, and they all say this stock is going up and down because the moving average is over this, which says it should be that. And you read that and you say, yeah, well, that's pretty mundane stuff. And I put it to you, though, that this AI stuff, the ChatGPT stuff, is significantly different. And I've just got a couple of examples here, and you'll see the last one answers the question, what is linear regression? So I'll just put into some context. I have up here, I've asked the question, what's the plot of Phantom of the Opera? or Romeo and Juliet. So that's a couple of. I went to the Phantom a little while ago. Routinely, when I go to the opera, I will go onto the web beforehand. I'll go into Wikipedia, and say what's the plot, so I can reprise myself the plot, and you'll get 6 or 7 pages worth of detail on the plot of Phantom of the Opera or whatever, and that's normally far too much. So let's cut to the chase. When you ask the question, what's the plot of Phantom of the Opera, what do you get? Oh, sorry, I'll go back one. This slide I put into this presentation, I just came across in the press. Sony have a worldwide photographic contest, and it was won this year by this picture here, which is called The Engineer, I think, or the Electrician, I think. Don't know why. So, but this picture won it, and the artist who submitted this picture, after he had won the prize, fessed up and said he did not produce this picture. This is produced using AI software on his computer. And it stunned everyone in the photographic world, because nobody would have picked this as an AI piece of art, certainly not one that was going to win a major photographic prize. So it throws up some challenges to us as to how AI is going to work within our environment. Hopefully, it'll improve what we do and how we do it. Going back to the previous presentation, before I had that picture, if you ask the question, what's the plot of Phantom of the Opera? This is what you get. And I won't read through it now, but if you read that, it's very, very readable. You would not really pick that had been written by a piece of software technology. It's succinct. Everything is in context, and that's a nice little summary. Another one, for contrast, Romeo and Juliet. We all know the tragedy that is. There in 3 paragraphs and whatever it is, 6 sentences, you get a summary of Romeo and Juliet at your leisure. Please read that, and you'll see that it's eminently readable. And I challenge anyone to say that has been written, certainly at first glance, by an AI engine. But let's take it back more to the world of what we're here tonight. You ask the question that's more pertinent to us. You ask, what's the best 5 ETFs in Australia? And what you get back here is the result from the ChatGPT bot. And it reads something like it's come from an investment advisor. The disclaimer at first up top took me quite by surprise when it says determining the best ETF in Australia depends on individual investment goals, risk tolerance, and other factors. And then says here are some of the most popular ETFs. The ones it's got there, we would all agree, I think, that those are representative of popular ETFs within Australia. It gives us a little bit about the performance and what their code is and so on. And then at the bottom, there's a similar disclosure that you would normally expect to see from a financial advisor, saying it's important to do your own research and consult with a financial advisor before making any investment decisions. I put that out there as something to watch this space. That sort of response in the charting world or in the financial advice world is quite profound, I think. And I think we will be getting more and more responses from our financial advisors that in fact could be coming from not a financial advisor, but from a financial bot using this technology. So that was a long way. That's a long way of getting to the next slide, which says, what is linear regression? And that's what the ChatGPT bot gives. It's a little bit more technical than I suggest a couple of the other ones up above. But it says, if you look at the second sentence, it involves fitting a straight line to a set of data points in order to estimate the relationship between the variables. So this is in context of a chart. And what we're trying to do is draw simplistically a trend line on a chart, but do it automatically using the science of linear, the mathematics of linear regression. It's linear, so it draws a line. The general formula of line is A equal AX plus B. So it's a line plus a constant plus a slope. And they have it here. Lambda equals beta 0 plus beta 1x plus epsilon. It then says the slope represents the rate of change in y for unit change in x, whilst the intercept represents the value of y when x is equal to 0. That's the crossover to the axis. And then at the bottom it says linear regression can be used for a wide range of applications, including predicting stock prices, analyzing the relationship, and estimating the impact of market campaigns on sales. So that is a very succinct description of linear regression. It may not appeal in that form to everyone, but that is a valid description of what linear regression is all about. Now let's see that in more pictorial form. That simplistically is a price chart with 1, 2, 3, 4, 6 prices on it, closing prices, let's say. And linear regression involves drawing a line on that chart, which is the best line as the average fit for those points. And it does this by calculating the distance between each point in the line, and then summing the square of those points, those distances, to make the sum of the distances the least. So what it's trying to do is to try to pull that line in amongst those points so that it is as close to as many of the points as possible. And figuratively, I like to think of it as, if you look on that picture there, the little green lines, the vertical green lines are the deltas, are the difference between the point and the line. If each of those green lines was a little piece of elastic string, it's trying to pull the line towards its point, and that is where that line would end up if you put all those little bits of elastic string in there between the points and the ruler that it represents the line. Now, this is linear. There are lots of other forms of regression. So, for instance, if you can get a closer fit to those points if you use curved lines. And those of you who may have come from an engineering background may be familiar with Fourier analysis that says you can fit any number of points into a single line, providing you put in enough formula with enough indices to make that fit. This is linear. It fits within the world of charting. You can think of it as drawing trend lines, but these trend lines are being drawn automatically for you by the software. Couple of little caveats here, buyer beware. A linear regression line is an approximation and therefore is not guaranteed to be the best fit at all times to all things. And to demonstrate that, here are 4 very different sets of data items, the dots, the orange dots. And there are the 4 linear regression lines that apply to that set of those sets of data. And what you have there is 4 very different sets of data having the same linear regression line. Some of those charts that are there you would not normally see within the financial world. So you look at the chart in the right-hand corner, you've got a bunch of dots all on top of each other and one right out the end. That's not something that would be characteristic of a normal pricing chart. But the other ones could be, because they have, and what they have in common there is they've got 1 dot per vertical time period per along the x-axis. So all of those charts could be, you could find charts in the real world like that. Typically though, charts at the top left-hand corner, the more scattering around is what you would be applying this to. So there you would have, if you think about it, that might be a set of close prices over a period of time, whatever it is, 10 days, and that would, or 10 months, and that would be the linear regression line that is the best fit line for those points. But beware, some special forms of dots can give erroneous impressions. Okay, BullCharts allows you to specify a linear regression line, and the blue line on this chart, this is what the XJO, the blue line on this chart is the linear regression line from the 1st of March to the 1st of March 21 to the 6th of March 23. So that's a 1-year linear regression line. And that says that for over that period of time, that line is the best fit. And you look at it, you think, yeah, seems reasonable. And that's telling you that over that period of time, that data is in a downward, slightly downward trend. And you go, okay, fair enough. So let's demonstrate that against a live chart if we can get up to. So this is, if you remember the last slide, which is XJO, I'll put it onto XJO. And over here, and I have my drawing tools on the left-hand side toolbar. You'll see under the regression one, there's 4 regressions. Click the top one, I get a linear regression, and I can place that onto the screen. So, and when you drag that across the screen, you see that the linear regression line wiggles up and down and is giving you, if you like, the slope of that screen. And oh, that's quite interesting. Yeah. Now, in terms of charting, the most interesting linear regression line is the one at the end of the chart, because that's where we are today. It might be interesting to know what it was doing 6 months ago, but I'm really interested in what it's doing at this moment in time. So I've anchored this linear regression line to the last bar on the screen, and I've just drawn that. I don't know how many bars that is, but you can see that you can shorten it, and that also has an influence as to whether it's up or down. So when it's a very short linear regression line like that, which is whatever it is, 6 bars, it's following the slope quite closely. And yet when I pull it out here, it follows much more slowly. So linear regression lines follow slope. Short linear regression lines follow slope quite closely. Long linear regression lines follow the slope more gradually. Now, those of you that know me know that I love ribbons rather than putting stuff on screens, and I have at the bottom here linear regression line of 13 bars long, and I can change that to be, if that was 52. So you can tell from this linear regression line when the linear regression line is positive, when it's negative, when it's positive, when it's negative. If I draw this linear regression line to, oops, wrong one. If I make this a year long, oops, go back, April 20. So that bar there is 52 weeks long, which is the same as the bar at the bottom. And you'll see that when I drag it, at the moment, you're looking at the value of the linear regression at the very end of that line. It's in the green. And if I drag the whole linear regression box across the screen, you'll see it flattens out, pretty well flat, and now it goes negative, which you see down the bottom, down here. That point is now gone into the red, and it's still red. That linear regression line is negative, and now it goes flat, and now it flips into green, and so on and so forth. So that tool allows me to set a linear regression line and turn it into a bar, so I can tell whether generally that line is upwards or downwards over that period of time. Linear regression lines at 52 yearly ones tend to be obviously move slower and tend to have bigger blocks of red and green in the ribbon. If I go down to something like a 5 linear regression, you'll see that this is green, red, 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 green, red, red, red. It bounces all around, and that's a reflection of the fact that if you've got a 5 linear regression bar and you drag it, it's all over the shop. It's a bit like a little caterpillar there, isn't it? But that up and down, up and down, up and down is accurately reflected within the linear regression bar at the bottom. Right, let's go back to the PowerPoint. So I showed you there a linear regression line in BullCharts, one line moving across the screen that gives you the concept of the slope across time. And I indicated that a linear regression line at the right-hand side is the one that's arguably most important to you, because that's telling you what it's doing at this moment in time. But you may want to have a screen with multiple linear regression lines, and you've got to be a little bit careful, because this is a silly example of multiple linear regression lines. What's it telling us? How can we make this give us more information, more coordinated and coherent information? I said that you really want to anchor them at the right-hand side. So what we have here is 5 linear regression lines, and offhand they're probably something like you can see that we have one very long one going out for 6 years, and then one that's 2 years back, one that's 1 year, and that gives us a view of what the strength is of the stock at the final bar. In this example, we have 3 of those linear regression lines are up and 2 are down, and that says that the strength of the trend for this chart at the current moment in time is 3 up, 2 down. It's somewhere in the middle. If all linear regression lines were negative, I would say that says that stock is in a bit of strife. If all linear regression lines are positive, I would say, oh, that stock is looking strong and healthy and potentially could be described as upward trending. So if you're going to put in multiple regression lines, how many do you want? Where do you put? Which ones do you want? Where do you want to put them? I have played around with different numbers, but I suggest that you should look at having 4 linear regression lines. One is an extra long one. An extra long means sort of a year, that sort of time. A long one, maybe 6 months. A medium one, maybe 3 months, and a short one, a week or so. I anchor them all at the last bar, because that's where you get the information that's useful to you. Doing this analysis of something 6 months ago may be of some historical interest, but it's not going to help you in terms of picking stronger stocks at this moment in time. Again, how many options do you want? You can choose whatever lengths you want for your linear regression bars. The simplest is probably calendar, so that these are, I should preface this, I'm a weekly, I look at weekly charts. That's sort of my world, is a weekly world. So you'll see that the calendar length here is, 7 for 7, 13, 26, 52, 104 would be sort of weeks. But it's valid, and I've tried this. You could use exponentials to pick your linear regression bars. You could use Fibonacci. I've tried that. And you could even use somebody's birthday if you felt there was magic in those numbers. Once you start doing this, you can get lots and lots and lots of linear regression lines. And this is not linear regression, but many people say a picture paints 1,000 words, to which my riposte is not always. This is a chart that I pulled off the internet from the Hot Copper website, and this is genuinely someone's analysis of Pilbara Minerals, and I have absolutely no idea how to read that. It doesn't speak to me. I couldn't speak to it. So I obviously am a proponent of ribbons, and what I have here is a mechanism that turns 4 linear regression lines into one ribbon. I have said that I want to do the analysis based on 4 lines. There are the 4 lines. Those 4 lines looks like a 4, 7, 13, and a 26. So it's 26, 13, 26, 52, 26, 13, and 7. Oh, down here. So this linear regression line takes those 4. this linear regression ribbon takes those 4 lines and looks at whether we have got how many are up and how many are down. At the very last ribbon, the very last data point, we have got 1, 2, 3 regression lines that are upward trending and 1 that is down. And that gives me a lime green color. Dark green would be you had 4 linear regression lines are up. And you'd see that in this part of this uptrend, you would have, if you had those 4 lines there, they would indeed be, all 4 would be up. When you get bad periods, like here, all 4 would be downward trending. And that says from a linear regression point of view, with these 4 linear regression lines, that's a bad time, that's a good time. And at the moment, we're reasonably good time. We've got 3 out of 4. In fact, I won't go to show that in BullCharts at the moment. It'll digress. But when you scroll across the ribbon, it pops up and tells you how many ups and downs you've got. So this would say 3, 4, 3, 2, 3, whatever. So you can look at the ribbon and get a really good feel as to what the linear regression lines are telling you without having a huge amount of mess on your screen. This ribbon here is formed from 4 linear regression lines for each point. So this ribbon represents 880 linear regression lines, and I don't think 880 linear regression lines on this screen would help you understand anything. Certainly not me. But of course, you may want to have a combination of linear regression lines that are more than the 52, 26, 13, and 7. And you can choose whichever linear regression lines you want. So if you're looking longer term, you may want to use longer linear regression lines. You look at short term, you can look at shorter linear regression lines. And not surprisingly, the long-term ones give you a more stable view of the world. This is generally uptrending, then it goes off the boil, then it goes back into uptrending. When you look at the short one, it's much more up, down, up, down, up, down. And this may appeal to you more if you're a short-term trader. I tend to feel more comfortable in the longs on the 52, 26, these 2 middle bars, if you like, speak more to me because I can see extended periods of greens and reds that to me say this is good, this is bad. The other ones speak less to me. And the very long one, whilst it may speak to me in terms of uptrending and downtrending, I suggest the time frame is just too long if you've got to wait 2 years for something to turn. When I do that, I then switch off the linear regression lines on the chart because they are meaningless in that all the information of the linear regression lines is encapsulated within the ribbons. And the one little feature that I put on to this one is I have the blue bit, the bright blue, is telling me that at that moment in time, all 4 ribbons are showing 4 greens. Oops. So you'll see here, underneath that blue is a green. Bear with me. Green, green, green. So that represents 4 greens. You go one step back. It's the extra long ribbon is green. The long is green. The medium is green, but the short is lime green, is light green. So they are not all 4 of those ribbons are not in agreement. And you'll see here that you get those blues coming up in periods of strong upward trending. And you'll find that when it goes sideways, as I suggested, has been here for the last year or so, you get a more mixed view and you don't get the bright blue, the dark blue agreement across those ribbons. And finally, again, to simplify things even further, what I've done is I compress all 4 of those ribbons, similar to what I did here, compress all 4 of those ribbons into one ribbon, which is a composite ribbon those four combined. And that says that for this period of time, it's strongly green, red, so it's mixed, it's not all green. Here you've got a better period of green, of strong growth. And over this period of the chart, we're saying, well, pretty patchy, not seeing anything there that points to a trend to me. So how, I mean, is this of any use to anyone? And how can you use it? This is the US SP 500. That blue line is not a linear regression line. In fact, that's just a hand-drawn trend line. But you'll see that hopefully that when you look at an index, which is where I would look for longer term market trending, when you look at the index here and you look at what the linear regression lines are saying, broadly, green is coinciding with the uptrend, and it's saying from about here, this is 2022, I'm not seeing any greens here at all, and that's what we see in the chart. So my thesis is that the linear regression lines here are indicative of what the underlying trend of the chart is, and matches what you would potentially draw if you were manually drawing trend lines onto the chart. Now, one of the things I like about linear regression lines in this way is that I'm not drawing the lines. I don't trust me. I am the worst person to listen to in terms of getting financial advice. So I would suggest that I would rather not draw trend lines onto a chart, but I would rather have a piece of software draw the trend line onto a chart. And that's what we have there. Okay, so let's demonstrate some of those ribbons on BullCharts data. Well, let's look. We're looking at S&P 500. There's that chart again with the hand-drawn line. I'll get rid of the linear regression line. So that is a linear regression line 26 drawn on that ribbon. And I would say that it coincides reasonably well with what the S&P has done on trending over that period. If I put another one on, I stop this guy. So there is that composite ribbon, or for the 52, which comprises part of that. And if I actually go and put C for composite into that indicator, you'll see that for these moments where it's all blue, that tells me that all four of those ribbons were in an uptrending phase. And this gives you some encouragement, I suppose, to say if I want to consider this uptrend, that's a good time to be in the uptrend. It then goes, you can see it goes flat for a bit because the S&P there has gone down, and then for this period of time, this is in agreement saying the S&P's in an uptrend for this period. And you'll see that as of, again, from January 22, this is saying that the S&P's in a downtrend, matches almost exactly where you would draw the line. As I did draw that line, and this line was not drawn after seeing the ribbon at the bottom. This line was drawn, as you can see, classic touching the tops of, pretty much touch the tops of four bars on that chart. NASDAQ, how does it look for there? This guy. Similar sort of picture. The 26 linear regression line is picking the trend quite well. This is the COVID situation, and if you're doing trending, it's not going to turn quick enough to pick up that, and you'll have to use trailing stops or some other mechanism to get you out necessarily if you want to avoid some drawdown on that. you'll see that for the Nasdaq, again, from this point in time throughout to the end, it's saying it's in a downtrend if you're using the composite line. But using the 26 and 26 being the 6-month trend line or linear regression line, it's saying that we're downtrending for most of this, and somewhere around here, we now have the Nasdaq beginning to be in an uptrend. Oh, wrong one. The code to draw all those ribbons is pretty simple, but it's easy for me to say. But that, if for instance you want to do a scan where the extra long linear regression line is up and the long one is up, oh, go back, and the medium one is up and the short one is up, this is the code that you just have to put. You define all of those linear regression slopes. You say that the long, you calculate the number for each of those lines, and if the number is 4, that says that it's true, that it is exactly what you say. When I did this, is going back a little while to when I did the presentation. These were the 7 stocks that were in a situation where all 4 of their linear regression lines were in an uptrend, and that says that those are potentially worthwhile buying. Another example, slightly different, where I'm actually picking up those bright blue lines. I'm picking up the first linear regression up. So I'm trying to actually pick the turning point, nuance the idea. But is it tradable? And therein lies the acid test. So I took a strategy based on this and put it into real test. Those are the parameters. Weekly strategy, University XAO, exclude the stocks that are less than 25 cents. And there's 6 or 7 of those. It doesn't really matter. There's not too many of them. I want a weekly volume of $3.5 million. That weeds out a few more, but because we're working on the X300, actually the X500, it's not too bad. I will hold 5 positions, equally weighted, not compounding, do it over 10 years. And the enter criteria will be the linear regression is up, all 3 up, and the smooth rate of change 10, smooth by 40 is above 5%. So that's saying I want all these linear regression lines to be going up, but I also want the price action to be rising at 5% over that period. And then very simple, this is just a demonstration, put a trailing stop at 15% below the most recent high close. That is the equity curve as produced by Real Test for that strategy. The red line, whatever color that is, along the bottom is the XAO. So that's a buy and hold within the XAO. And the green line is what would happen if you applied that strategy over that period of time. You'll see that it turned 100,000 into actually 400,000 over that period of time. So that's not a bad return. Whereas the same period of time, the XAO turned 100,000 into 150,000. So that, I think, is potentially tradable. Again, the devil's in the detail. There are some stock movements here this year particularly that are very favorable, and you might want to look at why that was and filter. You may not want to take all of those all the time. Different period of time over. Oh, back. Okay, so that is the presentation. I suggest if anybody has any favorite stocks they'd like to look at, shout out and we can have a look at it. This is, I think, is of use when you are looking at a stock and you put up its index alongside it. So let's take a stock that some of you may be in, something like FMG. And there is the linear regression line on that 6-month linear regression line for FMG, which, yeah, says it's, this is going up here and there's a bit of a difficult time here. But what you may want to do is put up the equivalent for the index. So here's the XAO linear regression 26. And what that says is that here, both the stock itself and the index is rising. So that's arguably a good time to get in. Here, once the stock is still rising, the general market is going a bit flat. So you may want to hang on if you're in, but you may not want to be taking an entry at that point, and so on and so forth. When we get to here, you can see that the XAO is in a downward trend with regard to linear regression over this period of time. And the viewer trading FMG, you might want to factor that into your decision making as to whether you want to enter into that stock. And so, for instance, you could say, I don't want to enter if the market is generally going down, and that would keep you out of a lot of this, and you'd be looking maybe to get back into this, but that's still sideways. So this is not definitive, but I think it is indicative of what the market overall may be doing with regards to the stock that you're interested in. So in summary, if I may, I think linear regression can provide some useful information as to the strength of an individual stock or an index, or perhaps a stock and an index together. I like it because it's objective. So I'm removing me, and I'm not drawing lines on charts willy-nilly. I'm using a mathematical formula to give me a chart line that can be compared to similar chart lines, and I should be able to make some objective statements about that. I think it can be effective in itself, but I think it's probably more useful to be used in conjunction with other indicators. One of the slides I put forward, you could pick any number of combinations of whether you want to go long-term, short-term, mid-term, whether you want to use Fibonacci numbers to, if you think they're magical, you could do all of that. Heaps of experimentation available to you, and I would encourage you to do that. I think it's useful if you put up a chart with other indicators, as an example like this. So this is a template that I would use often. Let's pick some stocks that would be of some interest, like ARB. When I look for stocks, let's try this one. I use lots of ribbons, and if a stock is healthy, we should see a big band of green at the end. And here's an example. So we have Neuron Pharmaceuticals, and you can see that all of the ribbons that I have here are pretty much in the green. And in fact, for the last 2 bars are totally in the green. And here we have the medium-term linear regression based at 26 weeks, so that's 6 monthly. And you can see that it has turned, whatever that was, a month or so ago, in conjunction with other indicators that I like to look at. And you'll see that it coincides with strength in the stock and growth in the stock. And according to my determination of the indicator, I have, as you can see here, put on, let's say that would be a buy and that would be a sell and what have you. Another stock at the moment that is looking strong for me would be Coden, where you can see that it has just turned, all of the ribbons have just turned to green at this point. And I'm not yet getting a buy signal on here, but I expect that I would get that quite soon. These, whatever it is, its stocks all come from a scan that I've run to look for exactly this situation where I'm getting a bunch of greens at the right-hand side. So you see there, X1 borrow. Speed things up, get rid of this guy. So you can see that here, these stocks have all got solid green bars at the right-hand side. And that is indicative of an interesting one. AGL has just turned, and AGL I think has been a basket case for a long, long time, and it is now beginning to turn based on linear regression amongst a bunch of other indicators. You can see here that Steadfast has had some nice, strong growth based on periods of where we have 5 or 6 green bars across this collection of indicators. So that's it from me. Linear regression, I think, can be useful. Use it with care. Combine it with other components of your indicators, other indicators that you happen to like. Use it in terms of finding long-term strength in the market, and also can be used to find long or medium to short-term strength in a particular stock. But I think when if you combine the stock analysis with the market analysis, you can get quite good results. And the back testing shows that it is actually tradable. And I'd be looking to include some elements of linear regression into my trading strategy. That's it, Robert. Thank you very much.
Very good, Des. Thank you. We've got one question in the chat box, and there might be others to come.
Sure.
David has asked, have you used a linear regression channel rather than a line?
Yes, I have. I have actually used. This is a bit like a channel where if I even an entry and an exit level. So I have looked at channels and I've even looked at taking the Bollinger Band code and using Bollinger Bands using linear regression values. That seems a bit too whipsawy, but I've looked at it, haven't come to any strong conclusion.
Des, David here.
Hi.
Maximo, who's done a lot of work in somewhere in the bull script section of BullCharts, he's got a channel linear regression that follows the price. You can have a 20/50, and you can also are you aware of that one? It's not.
Well,
no, it's not there. No, it's
there's
actually
a number of linear regression channels that are available within BullCharts.
Yeah, that's the one. Yep.
So, and let's just check, but I suspect that one there is just a simple linear regression. Let's check if that's true. Yeah. So that is a channel based around a central linear regression line. So I haven't looked at that in greater detail, to be honest. Rather, what the approach I've been taking is, what is the strength of multiple linear regression lines at the current point in time? If you've got 4 linear regression lines, or 44, pick a number, but if you've got multiple linear regression lines all going up, that's a sign of strength.
True.
And all going down would be a sign of weakness. The problem with any of this is you've got to get a length of line where it tells something, it gives you information, but it also is going to turn quickly enough for your style of trading that you can integrate that into your trading style. And for me, that says linear regression lines of 13 and 26 are sort of sweet point that works for me.
Fair enough. Yep. Maximo's it's an add-on indicator, and it basically just keeps on updating itself to the end of the chart. In your case, you're having to put it in and then move it around, which does allow some flexibility. But his you can have any channel width, and I generally use 20 on a weekly chart. 20 between 15 and 20, and then simply just have two lines as a channel. That sort of gives me a high and a low, or gives me an indication of where it's all falling into. But I find that.
Have you tried that? Use that as a system, so you could use like a Bollinger Band. You could buy when it goes into the band, and sell when it goes out of the band, or even sell when it goes across the middle of the band.
Yeah.
The problem, I find if you use Bollinger Bands in that way, or bands in that way, it's very rare till you get from the bottom to the top. You tend to get stepped out somewhere in the middle.
Mm-hmm. Yep, fair enough.
Very good, David. Thanks for the question. Des, thanks for the response. Any other questions? Des? I think that's all. Thanks for that. Thanks again, Des. Well done. Time's getting on, but looking at the minutes from last week's Melbourne meeting, there are some notes there about the detailed watch list, and I probably don't need to demonstrate it. This screenshot shown here is typical of the detailed watch list that you can produce for a watch list in your security manager. And it's easy enough to present, to prepare that and show it, and then sort any one of these columns. And this particular sample is actually all of the stocks from the XJO, the ASX 200, sorted by the percent move today column. We can move on. There's a whole list of stocks that we were looking at. Not sure if we want to look through those. And ex-dividend stocks that went last week or this week are actually for the next few weeks as well. That's all there is currently. That's about all I've got there, but if we have a look at the agenda for the meeting, we usually allow some time for you to ask questions or provide input about BullCharts, anything you've been doing lately, problem you've found, a bug or issue. In the Melbourne meeting last week, we talked about Ichimoku, and we were reminded that Alec did a presentation some time ago on Ichimoku, and the recording is in YouTube. And Andy had a look at it in the last few days and came back to me and said it was a really good presentation and worth looking at for anyone who wants to look at Ichimoku and is not sure what it is or how to use it. Alec, thanks again for doing that. So thank you all for your participation. Des, thank you again for the presentation. In the chat box, David said, great presentation, plenty of things to think about. And Phil said, thanks very much, very enlightening. Looking forward to playing with linear regression.